All right, let's dive right in. We're going to talk about one of the absolute biggest hurdles for any trader out there. How do you stop the chaos, the emotional trading, and finally build a clear, repeatable system? Well, today, we're going to build that exact framework for price action trading step by step to bring some serious order to that chaos. So let me ask you, does this sound familiar? You see the market just ripping higher. That FOMO, the fear of missing out, kicks in hard, and boom, you're in a trade with zero plan. Or maybe it's the other way around. Fear grabs you and you bail on a perfectly good position at the first little dip. See, that's not a plan, that is pure panic, and it's the absolute fastest way to blow up your account and crush your confidence.
And you know, this really gets to the heart of what I call the trader's dilemma. If you don't have a system, you're just reacting. You're like a little boat getting tossed around in the waves of market noise. But what if you could actually read those waves? What if you could understand the story the chart is trying to tell you? That's exactly what price action trading gives you, a structured way to interpret the market's narrative.
Look, to learn any new language, you've got to start with the basic rules, right? The grammar. I want you to think of these core price action principles as the fundamental grammar of the market. These are the building blocks that let you stop guessing and start actually reading what the price is telling you.
And the very first rule, the most important rule of this entire language, is so simple. Support and resistance are king. Seriously, everything, and I mean everything, is built on this one foundation. These levels are the floors and ceilings of the market. They're the battlegrounds. Every single high-quality trade idea you'll ever have starts by identifying these key zones, period.
So, these principles right here, these are basically your trading commandments, and they all stack on top of each other. Take wait for the retest. This one is so important. It means after the price smashes through a key ceiling, a resistance level, you don't chase it. No way. You patiently wait for the price to come back down, kiss that old ceiling, and prove that it can now hold as a new floor. That confirmation, that is your signal. And that's how you trade the reaction, not just a wild prediction.
Okay, let's define a word you're going to be looking for all the time. A failure. And listen, this isn't about you failing. It's about the market failing to keep its trend going. So imagine the price is pushing up, making a new high, but then, wham, sellers rush in and just slam it right back down. That rejection point, that peak where all the momentum just died, we now mark that spot as a failure. Spotting these is your earliest clue that the whole trend might be about to turn around. So we've got the basic language down. Now what we need is a map. A real charting framework isn't about just throwing a bunch of random lines on your screen until it looks messy. No, it's a systematic, top-down process for methodically finding the very few levels that actually matter and filtering out all that distracting noise.
This process here is what we call top-down analysis. You start with the satellite view, right? You're on the monthly and weekly charts, finding those huge, undeniable levels where price has turned hard in the past. Then, you zoom in a bit to the daily chart to see the current playing field. And finally, you zoom in again to the 4-hour chart to pinpoint the one specific level for your trade idea. And only then, after all that prep work, do you get to step 4, patiently waiting for that retest to confirm your level is real.
All right, the analysis is done. We have our map. We have our specific key level. Now comes the part where discipline really, truly counts. Execution. Let's break down how all of this planning funnels down into taking just one single, clean, high-quality trade.
This idea right here, it's a total game changer. Why is one clean trade enough? Because professional trading is not about being busy, it's about being profitable. Overtrading because you're bored or you've got FOMO just racks up commissions, and way more importantly, it leads to mental burnout and stupid mistakes. One perfectly planned, high-probability trade protects your money and your psychological energy, and trust me, those are your two most valuable assets as a trader.
With this system, absolutely nothing is left to chance. You've already found your level from your top-down work. Now you just wait patiently for that visual confirmation. Maybe it's a long rejection wick on a candle. And before you even think about clicking buy or sell, you define everything: your exact entry, your stop loss, which is basically your pre-planned emergency exit, and your profit targets. Every single variable is known before you risk a dime.
So what happens when a trade goes south? Well, a systematic trader has a clear, non-negotiable rule for that too. This is your invalidation point. It's an objective signal from the chart itself that says, hey, your idea was wrong. For example, maybe it's 2 candle closes in a row below your key support level. There's no hoping, no second guessing. The chart gives you a clear exit signal, and you take it. Simple as that.
So we've covered the rules,
the framework, the checklist for execution. But listen, none of it, not a single bit of it matters without this final piece. This is where most traders fail. It's not about finding some secret, perfect system. It's about having the rock-solid discipline to follow the good system you already have, especially when it feels uncomfortable.
This pretty much sums it all up, doesn't it? The two paths. The emotional trader is just a passenger, getting thrown around by fear and greed. But the systematic trader, they're the pilot. They have a flight plan, they know their critical altitudes, their support and resistance, and they've already decided what to do in an emergency before they even take off. They accept that some trips are going to be bumpy, but they stick to the plan because it gives them the absolute best odds of reaching their destination. This isn't just some list to memorize. This is the internal monologue of a professional trader. It's a commitment you make to yourself before the market even opens. And notice something. The focus isn't on being right. It's on having a process, an edge, and executing that process flawlessly, every single time, no matter what happens on any one trade. That right there is the only path to consistency.
So as we wrap this up, I want to leave you with a question. Just think about it for a second. Looking at everything we've gone over, from waiting for a retest to having a crystal clear invalidation point, what is the one rule that, if you actually implemented it starting tomorrow, would have the biggest impact on your trading? Whatever that is, that's your starting point.